You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 12th day of January, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our home page at cfrn.net. On the right-hand side of the page, click the big microphone. Can't miss it. Follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. What will happen is once you fill out that registration just one time, going forward, every day before the show and any time that we stream live on YouTube, you'll get an email informing you, and in that email will be a link that you click for one-click access to whatever we're broadcasting. And when you join that way, you also have access to the chat box. There will be days you're out of the office, away from your desktop, just point any internet-connected browser to cfrn.net/live. There you'll find a live real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live during this broadcast on YouTube. However, I'm only able to monitor one chat box, so if you type questions into the discussion on the YouTube stream, I won't see them. So, with that said, let's open with a word of prayer. I know that many are concerned with our economy right now and what's happened and what is yet to come. Heavenly Father, we thank you, God, for being faithful to the United States of America throughout our history. Thank you for blessing us to prosper and to grow from generation to generation. Thank you for keeping our nation through our economic hardships and financial conflicts. You've been very merciful, Lord. This whole earth, everything in it, and the people who inhabit it belong to you. It is you who supplies us with abundance. It is you who sustains us in times of lack. Your instructions are perfect. They revive our souls. Your commandments are clear and right. They give us insight for living. We, your children, delight in them and love to meditate on them day and night. We are grateful that you are willing to bear the heavy burdens of our nation so that we are free to worship you and receive rest. It is you, God, who strengthens our nation and holds us up with your victorious right hand. And by the power of the Holy Spirit, we command the economic infrastructure of the United States to submit to your will. We confess that the hope of our nation's citizens will no longer be deferred. God, we believe that you will raise up people within our nation's financial leadership who, like Joseph in Egypt, will have a supernatural anointing to receive, interpret, and administrate visions that will save companies, restore jobs, and open new opportunities in stagnant sectors of our economy. God, we decree that your solution will be sought and revealed in the earth to justify American jobs and encourage innovation and global competitiveness among domestic corporations, giving priority consideration to the United States taxpayer. We speak against the works of the enemy, the spirit of consumption-oriented capitalism, conspicuous consumption, greed, fear, perversion, uncertainty, and inefficiency. In Jesus' name, we command prosperity to come back from the north, the south, the east, and the west into the economy of the United States of America. And in Jesus' name we pray. Amen. All right, happy Tuesday. Let me give you the numbers from around the world. These are the cash markets, the indices as they're called. Now, I put a post this morning in the discussion group. We use the Telegram app, for those who don't know, for an awful lot of things. We have quite a few channels and groups. In the discussion group this morning, I put a post sort of explaining what the indexes are, what their purpose is, how they function hand in hand with the futures and the stock market at large. So let's start here with the numbers in the U.S. Currently the Dow down 94 points, NASDAQ down 49, S&P 500 down 19, the Russell 2000 up 26, and for the Russell that's a gain of a little over 1.25%. In the commodity basket, crude oil up 81 cents, trading 53.06 last. It's a gain of 1.5%. When the price of crude oil moves $1, that translates into $1,000 per futures contract traded. Gold is down $7.60, trading $18.4320 last. Silver up 14 cents, trading $25.42 last. In the Asian markets at the close, Nikkei posted a gain of 25 points. Shanghai rose 76. The Hang Seng gained 368. Now, for the Shanghai, that's a gain of over 2%, and for the Hang Seng, a gain of over 1.25%. And in the European markets at the close, FTSE down 44, DAX down 11, the CAC also down 11. That gives us a green day in Asia, a red day in the UK, and because of the Russell, it is a mixed day here in the US of A. With that, we'll go to Michael, get a recap of what happened this morning in the live training room. When I come back, we'll take a look at the big picture. We'll go to the daily chart of the S&P 500. We'll talk about this inside day of an inside day, and then we'll walk through the smaller time frames. We'll look at the Concierge Trade Alerts, the Logic 247 alerts, all that, and answers to any question you put in the chat box. I got your charts. You're locked and loaded.
Okay. Excellent. Yeah, I really needed that reboot this morning. Okay. So let me bring this up. Here we go. All right. So here we are. All right. Good afternoon, everyone. Today is Tuesday, the 12th day of 2021. I don't know why I wanted to say 14th. But anyway, it's the 12th day of 2021. If you're going to read the spreadsheet, you're going to read all the CFTC risk disclosures down at the bottom. Today, we made 6 ticks in crude, 19 ticks in gold, and 9 ticks on the ES. Put us up 362.5 on the morning session. Today, it took 1 minute and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 17 trades. So on the month now, we're at $4,270. That's over 7 trading days. We're averaging $610 per contract per trading day. I have now gone 220 consecutive days of getting my goal, and so far this year, 7 consecutive days. Now, this year, it is the 7th trading day of the year, so we've only had 7 chances, and we got it all 7. The yearly total and monthly total are going to be the same for the month of January, but for what it's worth, we're $4,270 on the year and on the month, and averaging $610 a contract on the year and on the month. All right. Now, if you have not taken a free trial with us and you want to, go to the home page here at CFRN.net. Scroll down to where it says free 5-day trial, no credit card required. Click on that. And then all we ask for is your name, your email, and your phone number. You can tell us your biggest trading challenge so we can tailor one-on-one training just for you if you want to. Hit the send button, you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click that link, we don't know that you took the free trial. So you got to click on that link, okay? All right, let's get into what happened and what didn't happen. Now in gold, we had a bunch of trades today in gold, and we ended up plus 19. We did have a stop out, but I'll show you all that in just a minute here. There was our stop out. And yeah, so our first trade on gold was right here, and we stopped out. So we're minus 8 ticks on that. It did eventually go up and did what I thought it was going to do, but we weren't part of the going up part because we had just gotten stopped out. I missed a nice long trade here, another nice long trade here. I missed a short trade here that probably would have been a break even. I took a break even there, and I took plus 12 right here to put me at plus 4 on the morning session. The next trade after that, so at that point we're at plus 4. The next trade after that, we picked up 9 ticks to put us at plus 13. Then we missed this trade. Here we had a break even. We missed that trade. Here we picked up 1 tick to put us at plus 14. And then here we picked up one more tick to put us at plus 15. And I missed that. I took a break even. I missed that. No, there's something missing here. There's one more trade where we got one tick to put us at plus 15, and then this was 4 ticks to put us at plus 19. But I missed that. That was a break even, and I missed that. During the break, let's see. We had some, we had some decent YBR trades. If you have bullish separation like this, nice bullish separation, to bounce off the BBC type trade and a YBR trade, those usually work out really well. If you get both of those at the same time, they usually work out really well. Okay. All right, let's look at crude oil, because we did actually trade some crude today. I know I don't trade it all that often right now because the volume's all mixed up, so it doesn't really have a lot of direction. But our first trade was a break even, our next trade was a plus 6, and our next trade was another break even. And there wasn't really a lot of stuff you could do since then. Maybe a YBR trade in here. This one here would have been break even, maybe plus a tick. And this one right here had the potential to give you a little bit more. But that was really all there was in crude. Not a lot going on in crude. We had 5 trades on the ES, and 3 of them were break even. Let me scroll back all the way to the beginning. This is where we got our goal for the day. Right here, we went long. And it was really a long on a close above the trend line. And I got long, and I took 8 ticks profit. And that was all within the first minute. It was actually 34 seconds or 24 seconds it took. And so I got the goal for the day right there. Then I missed that short right there. And that was a bounce off the BBC and a YBR short right there. I said those really, they tend to work out really well if you can get them. And let me see what else was going on there. Okay. And here it is again, a bounce off the BBC with a YBR. All right. And then we had this big leg down, but the only trade opportunity we had on that big leg down was, well, the first one was right there, and the second one was right here. Okay, for there. And the final one was right here for that leg. Okay, then break even. Missed a trade, would have been a break even. Then here we picked up 8 ticks. No, that's not right. Oh, I'm looking at the wrong thing. Yeah, we picked up 1 tick. Sorry, picked up 1 tick. And there we had another break even. Okay, I was looking at the wrong set. Here we had another YBR trade. Bounce off the BBC, YBR. Down close. Nice separation. That was a beautiful trade right there. And there's another opportunity right there. And another one right there. And finally, one more right there. Okay, it switched around and wanted to go in the other direction, but it really didn't. It would have been a break-even trade right over here when you closed up above the MA1. If you got long off the BBC right here, it would have been a break-even trade right here. Okay, then it flipped around, it wanted to go down, and it did. And then we get into the break, and let's see, during the break, there was, I'm looking at the slingshot to see where there were trade setups, and I really don't see price matching up with the slingshot all that well. There was one shorting opportunity right here during the break. And if you go all the way over here, looks like there was a little bit of a long opportunity right there. And that's pretty much it. That is pretty much it. That was the morning session. So let's go over this again, okay? Now, if you've not taken a free trial with us and you want to, go to the homepage at CFRN.net. Right here it says free 5-day trial, no credit card required. Click on that. It's going to bring you to this page, eminitrainingschool.com. You can go directly to this page if you want to. We might substitute something for that, Ryan. But, I mean, for right now, I'm going to go the week with just 3 markets because everybody seems to like that. And if you take the euro out of the picture, that's one less thing for me to look at and talk about that might be distracting to people. And, I don't expect people to trade 4 markets at once. So I might just knock it down to gold and ES. Who knows if crude keeps trading like it is and just kind of going sideways and not really getting any strong direction, then I might just trade 2 markets. And those are the ones where we're making the most money. So if I stick to them, I won't miss as many trades on them. Anyway, if you want to take the free trial with us, you can go to eminitrainingschool.com directly if you want to. And on this page, all we ask for is your name, your email, and your phone number. And you can tell us your biggest trading challenge, so we can do one-on-one training just for you. And we really do the one-on-one training. I have a couple meetings this afternoon, as a matter of fact. Hit the send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that link, we don't know you took the free trial. So, oh, the spreadsheet. That's right. Okay, so today is the 12th day of January. I was rushing it this morning. I thought it was the 14th day. And I don't know why I wrote down the 13th day yesterday. That's why I thought today was the 14th, because this was the 13th, but I fixed it. Today's the 12th day of January 2021. Today we made 6 ticks in crude, 19 ticks in gold, and 9 ticks on the ES. Put us at plus 362.5 on the morning session. And today it took 1 minute and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 17 trades. So on the month now, we're at $4,270. That's over 7 trading days, averaging $610 per contract per trading day. I've now gone 220 consecutive days of getting my goal. And so far this year, every day, 7 consecutive days of getting my goal. Okay, so it's all the same stuff on the annual right here, 4270, 610, and 7. All right. And with that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I'm ready.
Excellent.
Okie doke. Recap of the recap.
Today it took 1 minute and 1 trade to get to $100 a contract.
Good job.
Thank you.
Good job. Okie doke. All right, guys. Every day, Monday through Friday, we do exactly what you just saw Michael recap. Valerie and Michael are in the live training room every day, 2 hours a day, Monday through Friday. That's 10 hours a week of live instruction, where you are in front of live markets, where you have a live instructor, where you're able to not only follow along and trade in your demo account or your simulator, but you can ask questions. That's one of the difficulties of learning from a textbook or just watching videos. Of course, you can learn from that, but what do you do with the questions? If you're reading a textbook, you could probably email the author, or if you're watching videos, you could probably email whoever created the video, and a day or 2 or a week from now, you'll get a response, if you get a response. But the moment has passed. The beautiful thing about live training is, as the market is moving, as price develops, as Michael puts on and takes off trades, you can ask questions like, well, why'd you do that? Well, what's this for? Would you call that again? It's interactive. People always ask, well, how long will it take me to learn your strategy? Every person is different, but this applies to all people. The more you participate in what's happening, the quicker you'll get there. Trading is not a spectator sport. Investing is a spectator sport. If you want to learn how to be a trader, a consistently profitable trader, you're going to have to roll up your sleeves and get your hands in there. Now, when you become a member of CFRN, a partner, a passport holder, we don't want you trading live, because that's a surefire way to simply lose all of your money in that demo account until you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. That's when our 24/20 blueprint will give you the green light to actually go live with one contract. And then your goal, that's all right, And then your goal, once you go live, yep, we can hear you.
Hello?
Yeah, I hear you.
Yes, hi, Mr. Michael.
Yes.
Michael, you got an open mic.
This is Jake with PPC Academy's Hopakatsin at the moment.
No, it's actually a really bad moment.
Oh, okay. On the north.
Okay.
Sorry, sir.
Okay. Was that a telemarketer?
Oh, it was, yeah.
I hit
yeah.
your. I tried to hit mute on your end. I didn't quite get there quick enough.
Oh,
but
sorry,
yeah.
I thought it was me. Oh, okay.
No.
Well, anyways,
No worries.
I'm really busy.
No worries. So once
Okay,
you put together those 10 consecutive days in a row in the simulator, then our blueprint gives you the green light to go live with one contract. Now you have a new goal. You're trading real money now. We want you to increase your account balance by $2,000. Once you accomplish that, the blueprint gives you the green light to add a second contract with the profit you earn trading one contract. You'll trade 2 contracts for a while, and then the blueprint will give you the green light to add a third contract with the profits you earn trading 2 contracts. Now, to give you an example of what that means, if you come from the world of stocks and equities, people talk about shares. Well, I bought 50 shares of this, or I bought 100 shares of that. In the world of futures, they're called contracts. So we start with 1 contract, and then we earn the money to trade 2, etc. As an example, if you're trading the S&P 500 Emini Futures, which seems to be the most popular, 2 points out of the S&P with 1 contract, that's worth $100. Once you get the green light to trade 2 contracts, the same 2 points is $200. And once you earn the right to trade 5 contracts, the same 2 points are worth $500. And when you earn the right to trade 10 contracts, which based on the blueprint will take at least about a year, when you're trading 10 contracts, those same 2 points that used to make you $100 a day can make you $1,000 a day. Obviously, if this were easy, everybody would do it. Trading's not easy, but it can be simple. Here's another way that we make it simple. First, our methodology and strategy itself is simple. It's just based on the basic principle upon which markets operate. As you're learning in the room and practicing in your simulator and demo account, we provide you with around-the-clock alerts so that when our trained eye spots opportunity in the market, you're notified instantly via our Telegram app. Now, when an alert comes out, you shouldn't expect it to trigger immediately. I intentionally build in a buffer of time for you to finish whatever it is you're doing. Get to your computer, open up your charts, and prepare to trade. When the alarm on your phone, tablet, or PC sounds, it's not a call to trade, it's a call to come look at the alert and to look at your charts. The process works like this. You read the alert, and then you look at the chart, and then you apply what you've learned in the room each day. And as that trade triggers, you're in it, in your demo account in the beginning. So this gives you real world, living, breathing, real-time examples to trade while you're learning our methodology and strategy. After you repeat this process a couple hundred times, you start to see the opportunity yourself, because every alert is based on the very methodology that Michael teaches you in the room every day. Now, everything that we teach is fluid across all markets and all time frames. I can be in a mentoring session with someone and I can repeat that 5 times. And inevitably the question will still come out, okay, well that's fine for the S&P, but what about crude? So I say it again, because most people will tell you that's not possible. Most people will tell you, well, you can't really trade gold the same way you trade the Russell, because they have different personalities. And I don't argue that point, they probably do. But we're not looking for a relationship. We're simply looking for a high probability, low risk trade setup. So our methodology is the same whether we're on the 4-tick range chart or a 30-minute chart or a daily chart. When we go to the daily chart here in just a moment, everything I say about the daily chart, everything I say about market structure, everything I say about the indicators is identical to what Michael teaches you in the morning on the range chart. Looks different, feels different, but I assure you under the hood, it is exactly the same. So with that, let's go to a daily chart. We currently have, let me check, yesterday's low was 37.76 half. Today's low is 37.68. So yesterday was 76.50. That was the low yesterday. 76.50. Today's low is 68. 76, 68. Early going, we had an inside day of an inside day. Now what that means is yesterday, the high of the day was lower than the previous day, Friday. The high was lower than the previous high. The low was higher than the previous low. And so in early going today, we know that yesterday was an inside day of Friday, and this morning in the pre-market strategy session, we had an inside day of yesterday, which makes it an inside day of an inside day. Now that has changed because we just put in a new low. Now we talked yesterday and again last night in the discussion group and then again this morning in the pre-market strategy session about where the important areas, the major areas for support and resistance are. That's the point of going to the daily chart. Even though you trade off a 30-minute chart or a 4-tick range chart, it's important to have that high level view of where major support and resistance lies. So this morning, we knew that our first resistance would be the high of this session, which happens to be the 62% Fibonacci price extension. If price could get through that resistance, the next resistance would be yesterday's high. And if price could get through there, then the next important area would be the all-time historic intraday high. Last Friday, we had a new all-time historic intraday and closing high. Okay. Now, once we defined where important resistance was overhead, now it's time to define important support. The first place for the market to find support would be at the low of yesterday and then the low of Friday, which both of those tied right into this indicator that I refer to as blue and climbing, and the other little indicator in there is called the step line. When price drops to blue and climbing and the step line, either one, in this case both, we expect that to be good support until proven otherwise. What does otherwise look like? Otherwise looks like, see that little wick sticking down below? So intraday, we've spiked below that important support level. But what will be really important is where we close today. Will we close at or above this support level, or will we close below the support level? So if price comes back down to where that little wick is right there, if we close there or lower, that's an important message the market is sending us. Bears are in control, sellers are in control, and the next logical place for the market to find support is here at the daily BBC. And let me refresh this chart. Now, the clinical term for blue and climbing is the CFMA1. It does two things. It either displays blue and climbing or red and falling. Blue and climbing represents bullishness, support. Red and falling, bearishness, resistance. So the BBC, the green line, stands for bull bear cross. When price crosses above the BBC like it did back here on October 7th, that's bullish. We anticipate higher prices. But once price gets below the BBC, closes below it, now see we spiked it here, got red and falling overhead, so we're kind of just waiting for price to close the session one of these days below the BBC. Once it does, now we start anticipating lower prices, which we got. Now this retracement put in a swing low on October 30th, followed by a bullish session and another. Now we spiked the BBC on this day, but we didn't close above it. Following session, we did close above it. Once that happens, now we're bullish. Since November the 4th, price has not closed below the daily BBC. We spiked it on this day, but buyers drove it back up before the close. And that happened again here, and here, and a tiny bit right there. So now that we've looked at our daily chart, now this whole process, once you understand our methodology and strategy, everything I just went through will take you about maybe 3 minutes. In fact, this morning in the training room, or in the pre-market session, I had everyone jot down some important numbers. Major resistance overhead, and we were talking about 9:15 a.m. Eastern. First resistance overhead was 3806.75, then 3820.75, and then 3824.50. Support was down at 37.75, which was blue and climbing. And then the next support level, major support at the daily BBC, 37.25. So it takes you about 3 minutes to look at the chart, make note of the important prices, important areas, and now you're done with the daily chart. You don't have to look at it every 5 minutes, because once you identify those critical prices, you're ready to go to your smaller time frame. And the smaller time frame that I use for all of the alerts, Logic and Concierge, is the 30-minute chart. Now, my chart is busy, lots of arrows, lots of windows of opportunity. It's about time for me to go through and purge my charts and remove a lot of the old drawing objects. Now, the blue lines that you see are this week's weekly trading zones. The gray ones are last week's weekly trading zones. The new zones are issued every Monday morning at 6:15 a.m. Eastern. On Sunday night, when the week starts, the blowback session, the Monday session starts Sunday night at 6 p.m. Eastern. So on Sunday night, we're still using the previous week's zones. And as the week progresses, we're still watching the previous week's zones as the new zones kind of slide into place and take control. You should think of the zones as fixed support and resistance. Once they're published on Monday morning, they don't change the entire week. They're carved in stone. And so today is Tuesday the 12th. Back on Friday, okay, we can see that this zone served as good support. And then we come over here to yesterday, the 11th, and we see that the last week's zone still served as good support. And as buyers rallied the market up, they found resistance at this week's zone. And when price finds resistance and can't go any higher, it will reverse. It will turn and go look for support, which it found at this week's weekly trading zone. When the market finds support and can't go any lower, it will turn again and go look for resistance, which sends it back looking for support, which sends it back looking for resistance, which sends it back to support. So this morning when we hit this week's weekly trading zone, good support, just like it was yesterday. This vertical line separates yesterday and today. Price came down to the weekly trading zone 3786/87 and bounced us up to the BBC, bull bear cross. When price approaches the BBC from below, we expect it to be good resistance, and it was. We spiked it, but we closed below it. When price can go no higher, resistance, it goes looking for support. So we caught a little bit of a bounce at the zone, and then price traded through the zone down to last week's zone at 3778/79, and it spiked down to fill this window. This window was over here yesterday, and this morning during the pre-market strategy session, all the traders saw me just kind of slide it right across, and price spiked through that zone, filled that window of opportunity, and then we caught a nice bounce. We get accustomed to price turning at a zone often on a dime, so to speak. But you would do well to remember that zones are an area. Fibs are an area. Now fibs, when you plot fibs, it prints a price point on your chart to the decimal point, but it's still just an area. Sometimes price will turn right at the fib. Other times it won't. It'll just come a little bit shy. Maybe you've got an order sitting down waiting to get filled at the 38% fib retracement on whatever time frame you choose, and you're just waiting, and price, you're watching, it's coming down, 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 and right before it gets to the zone. Don't forget, you're not the only one watching this. Traders around the world are watching it. Nobody likes to get left behind, so sometimes buyers will come in early, and that's what causes price to turn and go the other direction before it gets to the fib where you're sitting and waiting with your order. Now, stock traders tend to buy and sell with limit orders, and I'm sure many futures traders do as well. But with our strategy, we enter the market on a stop. Buy stop, sell stop. In other words, if price is falling, instead of expecting price to pull back up, fill us, turn around, and then keep going down, we get out in front of the market and we put our order. In this case, the order would have been here to sell 37.75. We want the momentum of the market to trigger us into the trade. We teach you to use bracket orders. So what that means is once you're triggered into a trade, you automatically have a hard stop and a target. When I first started trading futures, I'm trying to remember the name of the platform that I used. I can't remember at the moment. They didn't. Townsend Analytics was the company behind it. It had another name. But anyway, that platform didn't even offer bracket orders. First time I saw bracket orders was when there was some issue with Townsend and we all switched over to Ninja. That was my brief experience with Ninja. And bracket orders, wow, that's cool, because before I had access to the bracket order, you had to put on an order to enter the market, long or short, and then once it triggered, now you got to go put another order in as your target and put in another order as your stop loss. And that caused a lot of people to never get around to placing the stop loss, because once they're triggered into the trade and they're watching price, jump up and down, and their pulse quickens and the little beads of perspiration begin to form on the forehead, you kind of just either forget about placing the stop loss order, or you're afraid of placing it because you're afraid you'll get stopped out. The beauty of the bracket order is that with one click, you're placing 3 orders. Now, when you place that order, only one of the orders is live. That's the one that triggers you into the market, long or short. But the second that order is triggered, the other 2, your target and your stop, those become live as well. After the one click, you sit back, fold your arms, and or tape them to the arms of your chair so that you don't touch the mouse, because you've already done your best thinking. Your best thinking never comes in the heat of the battle. Every decision that you have to make about a trade should be made before you enter the trade. You should know where your entry is going to be, where your target's going to be, where your stop loss is going to be. Now, Michael uses the DOM to trade in the room because he's constantly drawing trend lines. And when you trade off the chart, every time you click the mouse, it thinks you want to place a trade. And that's not always the case. For me, it simplifies the process. Let me just show you what I mean. If I click trade mode here, okay? Now, over here, this is where you define your bracket. Target, stop loss. Once you define it, it stays there. It will be there every time you go to place a trade until you change it. So, now that I'm in trade mode, let's say I wanted to sell 37.56 for whatever reason. Now, this is not a window of opportunity. I'm not giving you a trade setup here, just showing you how this works. If you look on the left side of the screen, it says buy 1, limit 37.55.50, and then in red it says sell. Okay, buy is a left click of the mouse, sell is a right click of the mouse. So if I go down here and find the price I want to enter the market, and I right click, now after all these years, I still use confirmation. A couple reasons. Number one, I'm prone to making a mistake, just like anyone else. And number two, because I do trade in a larger time frame, time is not of the essence. Now in the morning, when Michael's trading on the range chart, that's a fast chart, and we use the fast chart so we can show you many trading examples over the course of 2 hours. I trade on a larger time frame, so the fact that this is going to ask me, do you really want to sell here? Do you really want to put your stop here? And do you really want to put your target here? For me, that works, okay? But it's a personal preference. You can turn this off if you don't want it, okay? And so then, okay. Now what have I got? This order is live. The order to go short at 37.56 1/4, that's a live order. This is a demo account, but that's a live order in the demo account. This line that you see up here, this green line at 37.66 1/4, that's a stop loss. This line down here, 37.46 1/4, that's a target. Okay, so as price comes down and trades through this red line and triggers me into the trade, then the target and the stop loss will automatically become live orders. Now I've got my bracket set with a 10-point target and a 10-point stop. Rarely am I going to risk, if ever, 10 points on a trade. But I do want to make sure that the second I'm triggered in, that I've got some kind of a hard physical stop in the market in the event there's some type of flash crash. Okay, so once you're all set up here, now using market structure, and the simple 3-step methodology that I teach all of our traders, you can come over here, you can grab your stop loss, and you can move it around and get it into position exactly where your market analysis has told you that the stop loss needs to be. Now, same with the target. Okay, as soon as I place this order, even before it gets triggered, I can come over here and grab my target. If I don't think this trade, based on my analysis, has the potential to run 10 points, and I drag it up to wherever I think it has the ability to go. Important to note here, you don't ever want to risk more than the potential that you think that trade has. Now with alerts, we have an initial target, which is usually equivalent to $100 per contract per trade. On the NQ, it's $200 per contract per trade because the NQ is so volatile. But that's just the initial target. When we go through the alerts here in a moment, you'll see that most of the alerts have a second target, a third target, and then every alert has a final trade to target. On a long trade, the final trade to target is going to be the weekly trading zone overhead. And on a short trade, the final trade to target on the alert is going to be the weekly trading zone below. Remember, your weekly trading zones are fixed support and resistance. The two indicators that I've explained to you that you see on the chart, think of those as dynamic support and resistance. As price moves up, if it can get through this zone, which we expect to be resistance, now we know it was support, support, support. On the way up, we expect it to be resistance. If it can get through it, then red and falling is the next area for resistance. If it can get through red and falling, then we expect the BBC to be good resistance. You'll see on this pullback here, price pulled up to the BBC, it spiked it. Now let me come out of trade mode. Okay, now when price pulled up to the BBC, see this wick sticking up above it? This candle opened at the top of the red body. These are 30-minute candles. Price opened at the top of the red body and it moved up. We had a big green candle here. This is why it's important, whatever time frame you're getting your trade set up from, whether it's a 30-minute, the hourly, whatever, you need to let the candle for that time period close. Because while we were printing a big green candle, before the 30-minute period was over, buyers stopped buying. They bid it up to 38.03 1/4, and then nobody was willing to pay 38.03 1/2. When buyers stop buying, price starts to deteriorate. That's when sellers come in and pounce and do this. So what was once a green candle, before the 30 minutes were over, price traded all the way down to here, and then right before the 30-minute candle closed, buyers were able to push it back up to here. The following candle opened, started to print red, and as it took out this swing low right here, what a beautiful window of opportunity right down to the zone. That process repeats itself on the short side and the long side over and over, again and again, day after day, week after week. We've not changed a rule in our methodology or a line of code in our indicators for well over 8 years, maybe 9 or 10. If we've learned anything, we've learned if it's not broke, don't fix it. Now, many people will look at this chart and go, dude, where's all your indicators? Where's your MACD, your stochastics, your Bollinger Bands? Come on, man, you got to have the bands. Well, we don't. Now, I'm not knocking any other indicator. I believe all the indicators out there probably do exactly what they were created to do. However, I have so many voices in my head telling me what to do. The last thing I need is a bunch of indicators and oscillators on my chart arguing with each other over whether I should go long or short. We're, at the end of the day, price action traders. But the indicators that we've put together here, the ones that you see, which are the ones that we use, they simply make the price action more obvious, so that an untrained eye can rather quickly learn to read a chart just like you would read a mystery novel or a newspaper. Candlesticks are a graphical representation of investor and trader sentiment for whatever time period you happen to be looking at. It tells a story. Now, the first time you look at this, it just kind of looks like a mess. How could anybody? But, I mean, let's face it. Have you ever seen hieroglyphics in the wall, inside the wall of one of those pyramid tombs? That tells a story. I sure can't read it. If you hand me a book written or a newspaper written in Spanish, sorry. If it says bueno in there somewhere, or baño, or taco, I can read that. But beyond that, it's all Greek to me, even if it's Spanish. There is a language, candle speak, I call it. Now, we have a PDF that we give to all of our new traders, The Secret Life of Candles. Candlesticks are not magic, and they're not hooey. They're a graphical representation of investor and trader sentiment. Candlesticks and reading candlesticks has been around for about 400 years. The technique was developed by Japanese rice traders 400 years ago. Once you understand what happened in the life of a candle, like I explained on this one, price opened at the top of this body, buyers drove it up. We had a big green candle. And once we hit 38.03 and a quarter, nobody was willing to pay one tick more. And as buyers backed away, sellers came in, took control, and drove us all the way down to a price that enough buyers, now there were people trying to buy this all the way down and getting slaughtered, okay? But price finally reached a point where there was enough buyers, enough institutions and retail traders combined. When enough buyers start buying at the same time at the same price, important area, then this happens. Now we just traded up to the zone and red and falling, and look at what's happening to price. Now, our indicators did not make that happen. Our weekly trading zones did not make that happen. The indicators and the zones are a function of math. We don't know what's going to happen next. No one does. I don't care how clever their website or the ad copy and the email they sent you. They don't know what's going to happen next. Not with certainty. Now, every time they get it right, they'll send you another email. Hey, look at what we did today. Your question should always be, well, yeah, what'd you do yesterday? And the day before? How about last Friday? See, that's where it falls apart. We don't try to fool you into thinking we know something that we can't know. Why can't we know it? Because God says so. He did not give Adam the ability to change the past or to know the future. And those two things are inextricably linked for eternity. However, using math, we can know with certainty what the next high probability move in the market is with a great deal of certainty. When I show you the recap of the alerts this week, you'll see that roughly 20% of them have been stopped out so far this week, as they have been for the last 127 weeks. So while we can't know with certainty what's going to happen next, we can know with a great degree of certainty what the next high probability move is in any market, in any time frame, by applying math. The good news is you don't have to do the calculations, because these indicators do the calculations for you on the fly, and I do the calculations for you Sunday night before the market even opens. This swing high, all of our traders knew to be prepared for resistance at this number yesterday morning at 6:15 a.m. Eastern. They also know that if price makes it down to 37.65/66, there's a high probability that's going to be good support. Again, percent of the time, the market doesn't do the next high probability thing. It helps you, that's awesome. Now, Michael and I, in the beginning, back in late 2005, early 2006, he and I owned every indicator on planet Earth, even the obscure ones, right? We were indicator groupies. And once we had bought everything you could buy, and we still weren't consistent, we started to roll our own, both TradeStation developers. And even then, we remained one mouse click away from greatness. It eventually dawned on us that no matter what we added, no matter what filter, what indicator, what else, we were always, in the direction we were going, we would always be one mouse click away from greatness. So we decided to take a different path. Instead of adding yet one more thing, we started to take away things. Now, if it's an indicator you paid a lot of money for, that's painful. But when it's an indicator that you spent weeks or months, writing code for, that's really tough. But the more things we took away, the clearer the picture became. Pretty soon, we could actually see what was happening. And then we learned that by using market structure and a couple of simple indicators that you see on the chart, we could know with certainty what the next high probability move would be in all markets, in all time frames. Okay? All right. So now let's talk about the alerts. Michael teaches you in the morning, in the room, the strategy. Around the clock, we send out alerts that look like this. Now, the Logic 247 alerts, we're in week number 128. Let's get to the top there, week 128. Last week, week 127, we issued a total of 84 alerts. 9 never triggered. We had 75 actionable alerts. Only 4 were stopped out. That's 5%. That's not a typical number. What we've averaged over the last 127 weeks is that 20% of alerts do get stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and the 3-step methodology that I teach all of our traders. Again, 5% is not a typical week. Now, Sunday night, 6 p.m. Eastern, that starts our week. The Monday session begins Sunday night at 6 p.m. Eastern. Tonight at 6 p.m. Eastern, that will begin the Wednesday session. So as soon as the market's open, we're ready to start sending out alerts. The alerts allow you to practice in the simulator, in your demo account, everything you've been learning in the room from Michael and Valerie when she's teaching. You're not just watching videos. You're not just reading a PDF. You're not out there just struggling alone all by yourself. You have a living, breathing instructor who takes questions and answers questions every morning for 2 hours while he's putting on and taking off trades. And around the clock, you have these alerts coming out. Now, when Telegram, the messaging client we use, when it sounds the alarm, dee-dee-dee, it's not a call to trade. It's a call to go look at your charts so that you can apply what you've learned so that you can see the trade setup. You understand why the entry is where it is, where the target is where it is, where the stop needs to be based on what I teach you. When you've repeated this process a couple hundred times, you just start to see the opportunity yourself. You don't need the alert. Now, membership is for life. And so our discussion group is really an important part of who we are and what we do. Let me show you. We have traders around the world from all walks of life, okay? And this discussion group is open 24/7, 365. We all trade the same methodology, the same strategy, with the same indicators. What you're seeing here during this broadcast, what you saw this morning in the live training room, only difference between now and the training room is we use a fast time frame in the training room so you can see lots of trade setups over the course of 2 hours. Everything that I post is based off a 30-minute chart. The only difference is the time frame and the amount of risk involved. But all of our traders participate. Comments, they share their charts, they share their trade setups. And I spend a lot of time teaching, okay? Stefan, he posts some great charts, okay? He shares a lot with the community. We have a lot of members that do. Joseph, lots of guys. Odom, Owen, I could go on and on. I don't want to start listing names because inevitably I'll leave somebody out and I don't want to hurt anybody's feelings. Every member of our community is valuable, okay? And a community is only as vibrant as the members that populate it. So going back to the alerts, Sunday night, the unspeakable happened. The first trade coming out of the gate. Now you're looking at Mountain Standard Time. Telegram reads the clock on your computer. So if you're East Coast, it's going to show East Coast. If you're West Coast, it'll show West Coast. I'm Mountain Standard. 8 months out of the year, I'm Pacific because Arizona doesn't do daylight savings time. When you see a red X, that means it got stopped out. This is the Dow, a gap fill. The market gapped lower on the open. Friday afternoon, we closed with a doji, indecision. Sunday night on the open, we gapped lower. Buyers came in. They tried to rally it up and close the gap. Now, they got to the low of that last 30-minute candle, but the 30-minute candle actually closed at 38.22, and Sunday night buyers could only push it up to 38.2075. So officially we don't consider that gap closed. Missed it by a couple of points. Now we also had a gap fill trade on the Dow, which made it to the target. But Russell stopped out, the NQ stopped out. Now, last week, I think we only had 4 or 5 trades all week that got stopped out. But here's Sunday night. Boom, boom, boom. Did that shake us? Did that rattle us? Not at all. Over 127 weeks, we've put together well over 6,000 alerts. Out of 6,000, however many alerts it is, we'll see when we get to the bottom. We know ahead of time 20% of them are going to get stopped out. This is a business based on probabilities. There is an unequal distribution of profitable and unprofitable trades. Now, as we scroll through here, you'll see streaks where there's 3, 4, 5, 10 alerts in a row that reach their target. But this is going to happen. Now, when you get up in the morning and you sit down to start trading, it's a beautiful day. You used your new body wash. You smell good. You had some God time. You put that special cream in your coffee. Life's good, man. You see the setup, textbook. You execute, and then order flow shifts. It doesn't do the next high probability thing. But you already know 20% of the time it's not going to do the next high probability thing. You see, the reason most traders are so adversely affected by being stopped out is, number one, they think there's some way to not get stopped out. There isn't. And when they do get stopped out, they don't understand why. Because they're sitting in a room somewhere by themselves trying to learn how to trade off of some video or some PDF. Or they're getting tips out of some, chat room from some grumpy guru, okay? Everything that Michael and I found that was broken in this industry, we made a commitment. God, if you ever allow us to figure this thing out, we're going to make a point of trying to help other people to create a place where people can come and they too can figure it out and be treated with dignity and respect. Now, we don't do this just because we're nice people. This is a business. Let me say it again. While we both enjoy teaching, and it makes us feel really good when we see someone who has struggled and spent a lot of money to see them finally succeed and become profitable, of course that makes you feel good. But it's also an income stream. To become a member is $5,000, but that's lifetime access to everything we do. Every class, every workshop, or one-on-one unlimited mentoring sessions, the strategy, the indicators, I could go on, the weekly zones. You get everything we do today and tomorrow for life. We don't have any upsells. So I know a lot of places, once they get you in the door and you're struggling, they look at your struggle and they go, oh, you know what? You need module 2. So you fork over X number of dollars to get module 2, and it probably does help you a little bit. But then when you hit another rough patch and you send in a support ticket or however it works, well, the answer is simple. Dude, you need module 3. Oh my God, how many modules do they have? As long as you keep buying, they got another module. Okay? And when you stop buying the modules, you'd be amazed how your phone calls don't get returned, your emails get ignored. It's really sad. That's, again, Michael and I wanted to be disruptors in this industry, and we've done that. And I couldn't be more pleased with what God has done through us. We don't take credit for it. We're just a couple knuckleheads that were trying to learn how to trade. We bumped into each other on the internet. But God saw our heart, and He didn't tell us when to get in and when to get out. Let me just make sure you understand this. God will never move the market on your behalf. I don't care how pure your motives are. You can be down on your knees screaming, oh God, I want to take care of some orphans in Africa. I need this trade to work out. Okay, let's say you're long. Well, there's bound to be some other trader on planet Earth who has motives that are as equally pure, but he's short. Now, who's God going to smile on? The one that takes care of the most orphans, or the one that prays the most, or the one that pays a greater percentage of tithes? I mean, you see what a situation that puts. So God can't do that. He cannot move the market for you. What He can do, by the power of the Holy Spirit, He can open your mind, your eyes, your ears to learn how to trade. And that's really the key, is learning how to trade. Now, if you wanted to become a doctor, you instinctively know that you're going to have to go to school for a good while to become a physician. If you want to become an auto mechanic, you're going to have to go to trade school or serve as an apprentice for some undetermined amount of time until they finally give you your own set of wrenches. Airline pilot, chef in a fancy restaurant, principal, school teacher, pilot. You know, you gotta learn. Somebody's gotta teach you how to do the job. And again, most traders don't have that. They fund an account and they struggle and they struggle, and then they wire more money to Chicago, then they struggle and they struggle, and then they wire more money to Chicago, and then they end up just throwing the computer through the window and going back to their life with a bad taste in their mouth, saying it's all rigged. It's not. The market's not out to get you. Your office is not bugged. There's no little camera up there watching you go long with one contract so that the quote-unquote locals can run your stops. That's just an urban myth. Don't fall for that stuff. Okay? All right. So, stopped out 3 times in a row. Sunday night. What a way to start a week, right? And then this one doesn't trigger, and then this one doesn't trigger, and then the Russell pulls through. No trigger. Here's gold. Here's silver. Now, this was a $4,575 per contract trade. There was a short entry at 25.28. Initial target 25.26. Second target at potential support 25.15. Third target potential support 24.52. When Valerie came through to do the recap, this thing had already dropped to 24.36. That's what this number up in brackets represents. That's a $4,575 per contract move. Did I mention that to become a passport holder, a lifetime member with no upsells, it's $5,000. Only you can determine if what we do is right for you. Here's a hedge on the S&P, the Dow, the Russell, NQ, crude oil, gold, S&P again, and that ends our Sunday night. Now, you probably thought that was the whole week. That was Sunday night. Now we roll into Monday, yesterday. No trigger. Here's the Dow. No trigger on the Russell. Short on the NQ. Still waiting. No trigger. S&P. Long on the Russell. B is buy. Initial target. Potential resistance. Weekly trading zone. Stop out on the NQ. Long on crude. Short on gold. Short on silver. Long on the S&P. Stop out on the Dow. Short on the NQ. A hedge on silver. Still waiting. Long on the S&P. Long on the Russell. Which brings us to today. Stop out on the S&P. Short on the Dow. Still waiting on the Russell, waiting on the NQ. Long on crude oil. Still waiting, still waiting. Okay? Now, let me sum that all up with this. So far this week, Logic 247. Starting Sunday night at 6 p.m. Eastern, we've issued 42 alerts since Sunday night. 42 times our members' phones have gone DDD, or their tablet or their PC or their Mac. 7 of those alerts never triggered. We're still waiting on the results of 6. We've had 29 actionable alerts. 6 have been stopped out. That's more than the whole week last week. 21% stopped out based on not risking more than $300 per contract, per trade, less when possible, based on market structure and a simple 3-step method I teach. Now, we have another type of alert. These don't come out around the clock. These come out every evening shortly after the Globex Open. Last night I didn't get them out until about 8:20 p.m. Eastern. Now these numbers are good for the entire session. This is a static report. It's forward guidance for the entire session. Once this report is published, if price starts moving up towards 38.12, you get your buying shoes on. And if price starts dropping towards 37.83, you're going to get your selling shoes on. Beautiful thing about futures, you can be long, you can be short, all in the same hour if that's what the chart dictates. Once price hits 38.12, you want to be already long, or you want to get long, or you're only looking for longs once you get above 38.12. And if price is dropping, you're short, or at 37.83 you get short, or below 37.83 you only look for shorts. Price right now is sitting at about 37.85. Yeah, 37.82. So we just dipped below again the Concierge Trade Alert on the short side. Once an alert is triggered, there is a very high probability that it's going to trigger again, and possibly again, and possibly even again. Once triggered, there's a higher probability of an alert triggering multiple times than not. So, if you want to grab a screenshot here, you can. Oh, we got a special guest coming on tomorrow, 1 p.m. Eastern. Mr. David Grant, great guy, part of the Golden Journey, part of the G99. I'll be posting information about that in the discussion group this afternoon and tonight. And then I hope you'll all join us tomorrow at 1 p.m. Eastern and bring your questions. He's prepared to answer them. It's a great bunch of people that I stumbled into on this golden journey. It's not about just making money in the markets, which, hey, we all want to do. That's no secret. But these guys have taken it to another level. They've put together a way that they pay it forward. People that can't afford to even get into the markets, they help them out. I'm not pulling your leg. We're going to show you tomorrow at 1 o'clock exactly how it works. It's going to blow your mind. I promise you, it's going to blow your mind. Okay, let's go look at some of these trades. All right, on the S&P, the long side was 38.12. Now this vertical line splits the sessions. That was Monday. This is Tuesday. So 38.12 never triggered. And this is what I recommend that you do as soon as that report comes out. Go to your chart, draw a line in the sand, okay? So that visually you can see, is this a bullish session? Is this a bearish session? The short side was 37.83. 37.83. Now, it's not that unusual on the first touch of a CTA to see price reverse and head in the other direction. Not unusual. So this was the sell. 37.83. It's the heads up that below this line in the sand, you only want to be looking for short trades. You don't want to be a buyer down here. That's counter trend. It's like spitting in the wind. Okay, you don't want to do that. I mean, you can. There's nothing immoral, illegal, or fattening about counter-trend trading. Some people, that's what they do. They prefer that. My personal experience says that the greater degree of high probability favors you in a trend trade versus a counter-trend trade. So on the first drop, we dropped to 37.81 half. So there was 1.5 points. And then buyers drove that thing up. See, this is an important price, important area. And so it's not a surprise that buyers are sitting here waiting to do exactly that. So from support, we go to resistance at the BBC. This time we come back down. Sellers mean business. Okay. We drop to the bottom of this window of opportunity. What is the low there? 37.68. So from 83 to 68, set 15 S&P points at $50 a point. If your goal is just 2 points a day, then obviously this one candle gave you plenty of opportunity to get your 2 points for the day. Now, part of the three-step methodology that I teach involves multiple time frames so that you're able to dial down on this beauty so that you only have to risk what you think is reasonable profit in that particular trade. If your goal is only 2 points, you can't risk more than 2 points. If you're entering the trade with an open mind that says, all right, I see that this trade has good potential for 5 points or 7 points or 10 points. You know, you can base your stop loss on that. But as price begins to rise or fall, wherever it starts to struggle, be it 2 points, 3 points, wherever, you can exit the trade at any time. Learn to pay yourself as the market makes money available. Now, there's a difference in that and going into a trade, risking 10 points, knowing you're going to jump out no matter what at 2 points. That's bad math. That's bad science. You won't last long. If you can see that the trade has 5 or 10 points potential, okay, if it's 5 points, the maximum you would risk is 5 points. There's no sin in getting out with 2.5 points if the market starts to fall apart. If it becomes obvious that we're not going to make that final target, but you've got 2 points on the table or 2.5 points on the table, pay yourself. Be done for the day and hold your head high. You did it again. Taking points out of the market on a daily basis, not a big deal. Stringing those days together and turning it into a business, well, that's another story. That's what our 24/20 blueprint's all about. It helps you write your business plan. It helps you write your trading plan. And 90% of traders out there today, and I'm not talking institutions, I'm talking retail traders, 90% don't even have a business plan, don't even have a trading plan, don't even know they need one. But I'm here to tell you, you do. And our blueprint helps you write both of those. And you're going to write your business plan and your trading plan. You're going to custom tailor it to your personality and your risk tolerance and your account size. So 15-point drop. Price has now rallied back up to resistance, what we expect to be good resistance. On this pull-up, it was good resistance. So we're going to expect it to be good resistance until proven otherwise, okay? Which creates another leg to the downside. Trading's not easy, but I hope you see it can be that simple. Let's go to the Dow. Now, if the S&P and the Dow kind of look a lot alike, that's because that's how the indices work. The S&P and the Dow are pretty much joined at the hip. In fact, all four, S&P, Dow, Russell, and Q, they're pack out. They move as a pack. Now, today the Russell might be out in front, or the NQ might be out in front today. But they're moving most of the time as a group. Every now and then, you'll have an outlier, like when I gave you the numbers from around the world for the cash markets at the top of the show. The Russell was the only one showing a gain on the day. Everything else was negative. That happens. It's not common, but it happens. Okay. This is a current weekly trading zone at 720. No, it's not. Let me make these current. 30,740/45. And then above that, okay. And then above that is 31,200. Again, these zones come out Monday morning, 6:15 a.m. Eastern. We've published them since December 14th, 2009. Now, what's happened since yesterday afternoon, basically, is we've been pinging between the BBC and the zone. From support to resistance, back to support, back to resistance, back to support, back to resistance, support, resistance. That's how markets work. Right here, though, something important happened. Just like it happened here and here. Bearish cross, we're looking for lower prices. Bullish cross, higher prices. Bearish cross, lower prices. Now this is a strong bullish candle, right? But I need you to picture this in your mind's eye. See this candle right here? Okay. It opened right at that zone, right at that dotted line, that candle did. And it was a big green candle, just like this one. But before the 30 minutes was over, buyers stopped buying. They bid it up to 39.94 and they weren't willing to pay a tick more. As buyers backed away, sellers came in and knocked it down, just like the S&P. This was a big green candle, but by the time the 30 minutes was up, it was a bearish candle and it closed below the BBC. When price closes below the BBC, we anticipate lower prices. Not easy, that's simple. Okay, the Concierge Alert on the long side for the Dow. 31 0 1 0. Now, what was the swing high? Oh, 2 points over the line. As I said before, not unusual. First time up or first time down. It's an important price, important area. So buyers bid it up, bid it up, bid it up right to that point, and then back off. On the short side. Now, let me explain. That happens a lot with the concierge alerts, because concierge alerts are based on historical price action. The logic alerts are based on current price action. So we don't see that in the same way with logic as we do with the concierge, but the two work together like a hand in a glove, okay? As soon as the static report, concierge, comes out, go draw the lines in the sand, then wait for the logic alerts to guide you in the direction. Concierge, historic price action. Logic, current price action. So the short side for the Dow was 37.95. 37.95. Also, when this plays out like this, you recognize that you have a range. Now, if the range is big enough, it's certainly possible to trade inside of the range. But there'll be times when these two lines are very close together. And when price can't make a decent move through either one, then that becomes a market that you're best to leave alone until that situation changes. So the drop was to 777. So from 95 to 77, that's almost $100 per contract. But really, it's buyers showing you at this important price, important area, where they're willing to make a stand. Buyers are making a stand here. They're not willing to make a stand here. Let's go to the Russell. All right. Last night's alert, Concierge for the Russell, 21.24. Still working on it. And the short side, 20.77. I've got my 2 lines in the sand. Is it possible we could go through an entire session without the Concierge Trade Alerts triggering? It's rare, but yes, it certainly can happen. There have been logic alerts though on the Russell, because you see we're above the BBC. We had the bullish cross yesterday. Well, first we closed above the BBC, 9:30 yesterday morning Eastern. And we had the bullish cross roughly 10:30, 11. And what do we do? Now, notice that this candle here, it's that wick sticking out down just below the BBC. So we had a leg and a retracement, 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 a leg and a retracement. The pullback holds more often than it doesn't. Look at it coming down. Bearish cross, price pulls away, price pulls back. Leg, retrace, leg, retrace, leg, retrace. This time the pullback didn't hold, and we end up on the other side of the BBC bullish cross. So you see over here, we want to be looking for short trades, because that's the trend as defined on a 30-minute chart. We want that wind at our back. We don't want to spit in the wind. Go with the flow. And then when this happens, this transition, again, beautiful thing about being a futures trader. I'm a seller, I'm a seller, I'm a seller. Bang. I'm a buyer, I'm a buyer, I'm a buyer. Sell the rally, buy the pullback. Over and over and over. Or until you get your points for the day. And then you're done. Remember, 2 points a day with one contract in the S&P or the Russell, it's $100. Once you've earned the right to trade 2 contracts, it's $200. And once you've earned the right to trade 5 contracts, it's $500. 10 contracts, $1,000. Worst thing you could do is get clever and go, well, you know, I realize it's a good idea that I just spend that time in the simulator and only start with 1 and just add contracts with profit, but I'm a smart guy. I built this business here. I got some money in the bank. Let me just go to the head of the line. It will take your money faster than Vegas. I promise. Just don't do it. If you have this burning desire to part with your cash, go find some worthwhile charity and just donate it. The CME does not need your money. Okay? They're doing just fine. You either want to go gamble. If you want to gamble, go to Vegas. Take in a show. Enjoy some free adult beverages. If you want to build a business, follow the blueprint. That's my best advice. Okay, next on the list, NQ. Blue lines are current zones, gray lines are last week's zones. So we had a bearish cross, lag and a retrace, lag and a retrace, lag and a retrace, lag, bullish cross. But the bullish cross ran into trouble at the zone resistance, which sent us back below the BBC. Lag, retrace, lag, retrace, lag, retrace. So, what do you think is going to happen here? Now, I don't know what's going to happen next, but I do know with certainty that's the next high probability move. And 20% of the time, the market doesn't do the next high probability thing. In Q last night, 12,978 was the long side, never triggered. Short side, 12,868. 12,868. So would it be cheating to just kind of scan through the markets and see which one's responding, which one's doing the 80%, you know, this session, just like clockwork, and just trade that market today? No, it wouldn't be cheating. It would mean that you're learning how to trade. That's what that means. NQ short side 12,868. We dropped to 43. That's 25 points, $20 a point, $500 per contract traded. This drop from 68 down to 53. $300 per contract traded. And then this drop took us down to 767. That's 100 points at $20 a point. That 30-minute candle, the market made $2,000 per contract available. Now, we didn't make it available. All we showed you was where the important price, important area was, and provided you with a methodology and a strategy to take advantage of that. Back in the day, if you went to the movie theater and you got there after the movie started, there was an usher who would escort you into the darkened theater with a little flashlight that he would shine at the floor so that you don't trip over other people's feet while you're trying to find your seat. We're that guy. We're the guy with the flashlight. We just show you where opportunity is. We teach you what you need to know. We give you the tools you need to get the job done. But you got to dig down inside of yourself and find the patience and the self-discipline to bring it all together. The good news is you don't have to do it alone. Live instructor, 2 hours a day, and then me 2 hours in the afternoon, and then 2 hours every Thursday night, and 24/7, 365 support in the discussion group. You never have to trade alone again, and trading can be a very lonely business. All right, here's gold. Long side on gold was 1858. From 1858, we ran up to 1864. That's $600 per contract traded. Now, important prices, important areas, almost always tested. So from 1858, we ran up to 60 half, so 250 per contract traded, and then back below the trigger. This time, it ran from 58 to 64, so that's $600 per contract traded. Now, when you're going long, you want the support of blue and climbing. Got to be above the BBC plus blue and climbing. When blue and climbing turns to red and falling, no more going long. time to look at the short side. And last night the short side was at 1836. And the swing low, 35.80. So it went 2 ticks over the line, no follow through that time. Remember, not unusual for that to happen. Now that we found an area where buyers are willing to pay the price. Remember up here, they were willing to pay 1864, but they weren't willing to pay 1864.10. They lost interest, backed away, sellers took over, but once price dropped to 1835.80, that got the attention of enough buyers to drive it up. And now you got a tug of war here between buyers and sellers. What do we expect to happen here? We expect that to be good resistance until proven otherwise. And if it is good resistance, leg to the downside. Now this week's zone, that is correct, 1815/16. And above that, 1865/66. And these other zones up here, those are from last week. These are the two important ones to think about right now. They were important yesterday, important today. Gold is in a transition. If you follow my commentary, I talked about this in the discussion group last night on Facebook. Here's what I foresee, and this is just one man's opinion. Here's what's to come. We're long overdue for a sharp correction in equities. Bitcoin and gold and silver have just had a very sharp correction. As money flows out of stocks, I believe it's going to flow into crypto and gold and silver. They've already had their correction, or they've had a correction. It may not be over. But gold, what you're seeing here on this 30-minute chart, this is called a transition. Gold has been falling, 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 falling. Now it's hooking and juking back and forth. As we take out 65 and start heading higher, if this transition pattern completes, it's on. Now, we've seen some unusual trading activity over the past year. Historically, gold and stocks trade the opposite direction. Gold's going up, stocks are going down. But over this past year, we saw a lot of unusual trading where gold and stocks traded together. They'd rise together, fall together. Very perplexing. Because, you know, for decades and decades, it's not been that way. We are perhaps in 2021 returning to what we've seen throughout history. So again, equities, let's get this daily chart again. Now we're just looking at the last leg up right here. In fact, I got a better chart. This is all the way back to 1998. .com rally, .com bomb. Real estate rally, real estate crash, or the financial crash, the mortgage-backed, the whole financial crash was due in large part to the mortgage-backed securities, which is just a whole nother show. Real estate people saw, a home. It's where you build memories. It's where you raise a family. It's not an ATM machine. But people began to see it as that. You had guys who bag groceries for a living at Safeway, which is an honorable job, but they're making $8 an hour and buying $500,000 homes. You didn't have to be a mathematical genius or an economist to figure out that can't last. This is what it looks like when it doesn't last. So since we bottomed out in 09, leg, retrace, deeper retracement. This right here, that was the worst December since 1938. And then this was a pretty severe drawdown. And then, like a rocket, parabolic move up. Okay? This doesn't last forever. This was a pretty moderate. Now, remember how frothy stocks were, you know, when man discovered the internet? Remember? I mean, you didn't have to know how to trade. You didn't have to be a technical analyst. If it was a company based out of Silicon Valley, you just bought it and it went up and you cashed a check. Until that didn't work anymore. People came to their senses and realized, hey, wait a minute. This company has a clever domain name and nice graphic design, but they don't have any paying customers. That's not a sustainable business model. Boom. The house that your parents lived in that they paid $40,000 for suddenly was worth $400,000 or more. Well, that didn't last. Okay. So we had measured growth with ordinary pullbacks. We even had a deeper correction, which is good. That's healthy for a market. Now, this chart is not a forecast that price is going to, that stocks are going to come, or the index is going to come all the way back to 1600. But it could. And you need to remember that. Now, we've got a beautiful level for support here around 3200. But after 3200, we're talking 2100. This low matches up with this high. After that, support here around 1800. And by golly, then you're back at 1600. How quickly can it happen? Well, this is a monthly chart. Look at what happened in just 2 months. Okay, the high was 33.97, and the next month, the low was 28.53. That's a shave and a haircut. Yeah. If I take this and do this. Nope. I don't draw so good, so don't laugh. If what happened then just happened now, I mean, my goodness. We go from 3,700 to 2,500. Now, this is the S&P. There's a 10-to-1 ratio between the S&P and the Dow. So, if the S&P drops 1,000 points, that's 10,000 Dow points. If you understand how markets work, this shouldn't concern you. You know that a correction's coming. You either go to cash, you go to crypto, you go to precious metals, whatever floats your boat, whatever your licensed financial advisor tells you to do. Not some guy on the internet, okay? You need to consult. Now, here's the difference. You're retired or you're approaching retirement. Because if this thing were to crash all the way back to 1600 or worse, it will recover. The indices were created to go higher over time. There's 500 large cap companies in the S&P. If one of them gets sick, they get kicked to the curb and a fresh strong bull gets brought in to replace them. So yes, there'll be sell-offs and retracements and nightmares and all of that, but it will recover, and over time it will go higher. And if you're 30 years old, that's not a problem. But again, if you're retired or approaching retirement, That means you have a shorter window to work with. So you really need to go talk to an investment professional and get some that you can trust. I mean, you know, just because they have a commercial on TV doesn't necessarily mean. In fact, let me tell you the one person I trust. Now, he's a futures guy, but he knows people, right? I trust him, and I'm sure he knows people that he can trust. His name is Bert. Most of you know him. Bert Schlichter. He works for Daniels Trading. Daniels is a futures firm, and if you're a retiree or approaching retirement, you know, putting most of your nest egg into futures contracts, I'm sure Bert would never advise you to do that, but you talk to him because he is a licensed guy, and he can point you to someone that he trusts, okay? That can give you the advice. He'll give you advice, but if your situation is beyond his scope of knowledge, then he'll point you to somebody. His number is 866-928-3310. 866-928-3310. I have a standing promise from Bert. Whenever it hits the fan, I have a seat in his foxhole. He's a Marine, Semper Fi, and that's how much I trust him. All right? So you call him, 866-928-3310. So if we just got a repeat of this, we're here. Okay? So, back to gold, which started this whole thing, this whole conversation. What we may be seeing here is a transition. Everyone knows gold been selling off for a while now. Here's a gold chart right here. Now this is monthly. Over the last few months, we've gone from 1962 to 1830. So that's 60, 70, is that 130 points, $100 a point? Let's call it a lot. Let me scrunch it up. In fact, let me do this. Let's try that again. Okay, I'm gonna get it right. Go. I'll use the continuous contract so I can get more data. Now that's the all-time historic high in gold. This retracement. Okay. 1400 to 2000, back to 1800. Leg, retrace, leg, retrace, leg. See the double top here? Deeper retracement. That's how markets work. We went from a double top to a double bottom. This is a monthly chart. So as we come out of this and start to head higher, the market will typically go through this, a transition from bearish to bullish. Now this is just a 30-minute chart. This is just a snapshot in time. Tomorrow we'll look at gold on the daily, on the weekly. Just remind me. Oh, not tomorrow because we have a special guest tomorrow. Then we have Dr. Tom on Thursday. So remind me Friday, and we'll do that. We'll dissect some larger time frames on gold. Okay. We'll look at silver really quick, and then I got to run. Silver going through that same transition. Okay. And Bitcoin, all-time historic high, massive correction, and a bounce, now a doji, indecision. This thing could go either way. If it heads south, look for support here, then here, then here, at the daily BBC. If it goes the other way, look for resistance here, here, and here. Again, My thought for the coming year, sharp correction in equities, new all-time historic highs in gold, silver, and crypto. I could be wrong. It certainly happened before. Okay. If you had as much fun today as I did, you'll probably be out dancing. Right? Okay. Well, fair enough. Oh, I saw something today that really alarmed me. So let me alarm you as well. No, seriously, I just want to share. When I saw this, the first thing that popped, Dodger Stadium coronavirus testing site to turn into mass vaccination center. That's not the picture I had early. The picture I had was very provoking. Let me back up a minute. It was just something about the image. It was this image. Let's see if we can get that big shot in the sky. When I saw this, the first thing that popped into my mind was the fact that I didn't know how to spell Auschwitz. I can't even pronounce it. You know, I have no reason to believe that this is anything but good, but something stirred in my spirit, and I'm concerned. There'll be a whole lot of people in one place at one time, and each one of them are putting their life on the line, A, by being there, B, by taking this vaccine. And hooray for warp speed. They got it done quick. Quick's not always, the best. I hope it's the best for everyone who takes it. Will you take it? Will they force you to take it? Or perhaps will they tell you that unless you take it, you won't be able to fly, stay in a hotel, go to a ball game, a concert, church, or the grocery store? What if you showed up at Walmart and there was some guy there who's going to scan you somehow to see if you've taken the vaccine? We know what it's called in the Bible. Yeah. Everybody's going to have to take that to be able to buy and sell in the markets, the marketplace. They weren't talking stock market. They were talking, food to put on the table to feed your family. Am I saying that's what it will come to? No. But you better think about the fact that it could come to that. I mean, they're already talking about not letting people fly if they haven't had the vaccination. In fact, I don't know if any of the airlines have already implemented it or not. I used to spend a lot of time watching Fox News, way too much time. And you know what? The last few weeks, if I'm in a room where the news is on, now I try to stay well informed. I scan the headlines every day. But I don't sit there and just soak it up like I used to, because I started to realize it wasn't good for me. My times, I'm much better off spending my time either reading God's Word or just talking to God. And I've also learned that I should talk less and listen more. So, anyway, be aware. Stay safe. It is now time for our good word for the day. We've been talking the last few days about unanswered prayer. I think 6 days we talked about that. Today, we're going to switch it up. Matthew 5:37. Let what you say be simply yes or no. Anything more than this comes from evil. So, what we're talking about here is learning to say yes or no. Some of us find it very difficult to say no to certain people in our lives about certain things. And to a lesser degree, we may have difficulty saying yes to God. When God speaks to us, says, I need you to do this, I want you to be over here, put down what you're doing, go do this. Our answer should be, yes, God. Sometimes we struggle. Good negotiators understand that talking too much is a sign of insecurity and weakness. Most of you may know, or many of you may know, if you're closing a business deal, once you've delivered your best pitch, you shut up. Whoever speaks next just got sold. Might be you, might be the customer. You gave your best pitch, you had an attentive audience, but once you're done, if you've ever been taught how to sell, you've been taught when to stop talking. Sometimes the most potent word in any language is a simple yes or no, without further explanation or elaboration. Most decisions eventually come to that point. In order to do that, you must be able to answer these 3 questions. Number 1, is the decision mine alone to make? If you are the sole decision maker or the final decision maker, don't hesitate, don't vacillate. Make the decision. And before you do, stand on this scripture, James 1:5. If any of you lacks wisdom, let him ask of God, who gives to all liberally and without reproach, and it will be given to him. Number 2, what will happen if I put off making this decision? In most cases, things will either get better or worse for one or more party. So weigh your decision carefully, realizing that it is likely to lean in favor of the heavier weight of the argument. Then decide. At this point, stand on this scripture, Proverbs 3:5. Trust in the Lord with all of your heart, and lean not on your own understanding. In all ways acknowledge him, and he shall direct your path. Number 3, does every decision have a moral and spiritual dimension? When you compromise your convictions or character for popularity or profit, you end up morally and spiritually bankrupt. So hold to your values, base your decisions on them, and stand on this scripture, Proverbs 12:2. A good man and a good woman obtains favor from the Lord. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.